Welcome back. This is lesson 14 about specialization. The reason this is so critical before I move forward with technical analysis and cover convergence and our indicators and all that kind of thing is I want you to understand one big thing. There's absolutely no reason a beginner trader or even an intermediate trader should be trading more than 2 or 3 setups. And what I mean is this. Whenever you watch a sport, football, basketball, hockey, soccer, badminton probably, I don't know, tennis, whatever you like. Any team sport with more than 2 to 5, 10 people, 11 people for football obviously, on one side of the ball, what do? And what I mean is every single person on their side of the field or in their position specializes, right? Do you think when you watch a baseball game, is there a reason that pitchers don't hit that often, right? They're not good, right? They don't have the same skills as the guy who bats cleanup, right? At the same time, do you see a person who plays goalie running out and playing forward? No, they specialize. Why is Ford so successful? Why is America so successful? We have specialization. So today, I don't want to identify your specialization. I want you to have this thought process though, as you go through the rest of technical analysis and you start kind of scanning by yourself, you kind of get the training wheels off with me, you kind of start going out there again on your own. What is your specialization going to be? A lot of times people refer to this as your trading edge. This is a plan or an edge that you always act on. It's the same exact thing every single time. What do you do that's most comfortable and most profitable for you? What is your edge that puts you above the market average? How is it that you're going to make more profitable trades than losing trades? And at the same time, how are those losers going to be smaller than your small winners, right? How is that going to happen? It's your edge. So what I want you to do as we go through the rest of this lesson and the rest of technical analysis is to really, really emphasize, what do I like about what Evan is doing? I do not want you to go through the rest of this and do exactly what I do. There's going to be things I want you to pick out by yourself. Oh, I like this, I like that. And then I want you to go like, I don't like that. That's totally fine. This is my edge, this is what I do. If I really like ascending triangles and you really like, descending wedges, or you really like SMA lines more than EMA lines, like you like the 100 instead of the 200, that's great. You need to start taking the training wheels off, watching what I'm doing, use it. It definitely works, right? But there's definitely ways that I am not going to be able to make you as good as you can make yourself. You need to develop your own specialty and your own edge. So let's talk about it. Firstly, I need you to be extremely specific. I want you to find maybe one setup that you like. And by setup, I mean you need to find a pattern that you enjoy. Is it a horizontal channel with just easy supports and resistances? Great. Trade that. Nothing else but that, right? You buy in low, sell high, buy in low, sell high. Find 20, 30 tickers like that and go crazy. If you really enjoy setting triangles, do that same exact thing. I need you guys to be very specific in your setups to start. You do not diverge from the one setup that you like. I need you to become very specific in one. The reasoning is you think about somebody who's really good at a sport as another comparison, another parallel. LeBron James, when he first started, played just small forward. He did not play point guard, he didn't play shooting guard, he didn't play center. Now in his 18th, 19th, 20th year in the league, he can play all 5 positions. He was actually the most assists last year in the NBA, playing point guard. He's become better, but when he started, he was very specific in what he does, right? Think about a quarterback, right? We just have Trevor Lawrence coming out of the draft. He's going to be very specifically good in a system and in that one position. You need to master your first position or your first setup first before you expand. So again, while we go through these, we just did our pattern lesson. Choose a pattern, choose a channel, choose something that you really enjoy and you really understand and really sticks with you. This is not a pissing contest. There's no competition. Find the easiest ones to make money and stick with it. Whatever makes sense to you, do that. Secondly, after you've developed your own edge, right? This is your foundation. You have your foundation. I like to sell and buy horizontal channels. Great, good job. You got it. You need to avoid other people's edges. Now again, the people who buy this are going to have a very similar edge, but again, they're not going to be the same. And again, the reason I say this is because it's very true. You're going to have people, and this is a true statement with economics and supply and demand. You're going to have people on Facebook, on Twitter, on YouTube, on Reddit, whatever it is, like myself, who are going to promote something. Hey, buy AMC. Hey, buy NIO. Hey, buy Tesla. Whatever it is. Whatever their thought process is, they're going to give that out. 10,000 people believe it. 20,000 people believe it. 100,000 go in on it. that is going to affect how much you can earn. And again, this is a dynamic market. You can always be like, oh, well, if everyone's gonna make money, I'll make money. Not always the case, right? Especially if you don't understand the edge. Have you ever done a job? Have you ever planned anything, done like a birthday party? Have you ever done any kind of planning in general? There's a high chance someone tried to help you and you didn't see eye to eye, right? There's definitely some chance that you were like, yeah, I want to do it this way though, right? You ever watch somebody who's worse at technology than you or better than technology, you do it a completely different way for the same exact result? Very similar to edges, right? You need to avoid what other people are doing. You need to develop yourself. As a teacher, when I borrow someone else's lesson plans, it is a effing disaster. It's heckin' bad, as the kids would say, right? It's not good because I didn't develop it. It's not from me. I can't intrinsically explain what I'm doing to myself. You need to create your own. Secondly, with supply and demand, if everyone's going after the same pot of gold, there's less pot of gold, or there's less gold to go around, right? There's a pie, and you have a million people going for that pie. If you're not in the beginning, or you don't get in early, that pie is gonna shrink and shrink and shrink and shrink, and you're getting more risk, right? So again, everyone else's edge may work for them. You need to develop your own and avoid others at all costs. So once you figure out those two things, I'm going to avoid everything besides channel plays. That's your foundation. And then I'm going to avoid other people's edges, right? We're building our house. I'm going to have my own edge, develop it myself, right? Thirdly, do you want to play reversals or breakouts, right? And again, that's going to come with any pattern you pick, any trend line setup you pick. There's going to be reversal areas and breakout areas. We've talked mainly about reversals, right? We buy low and sell high. If you are more inclined to want to buy into breakouts, that they go higher, retest, and take off, decide that now as well, right? Channels, trend lines, patterns can again reverse, continue, breakout. You must choose either buy into reversal areas or into breakout areas. Decide that now as well. Just get it out of the way, whatever you want to do. 95% of you are going to probably buy into reversals just like I do. Now that we have that down, foundation, avoid other people's stuff, what kind of trade do you want to do? I need you to understand there are a few other rules I want you to teach you. One, you need to stick to a price range. You're going to be very confused early on with leverage and buying more shares gains you more money and loses you more money. A 10 cents penny stock, 1,000 shares of that compared to like one share of $1,000 stock will make majorly different moves and different gains. So I need you to also put a price range from $5 to $10, 10 to 20, 50 to 100. You need to be very specific in the price ranges as well, and also limit yourself there until you get better at understanding the calculations. Next, risk versus reward. While we take on these trades, again, I'm more experienced, so I can internalize saying, all right, 2 to 1 for this play, 3 to 1, 5 to 1. I'm good at finding this. You need to be extremely specific while we go through the rest of this class. What is your risk tolerance? What is the best formula for you? Do you like to buy areas of reversal, like we almost all will be doing? What's your goal? 3 to 1 risk? So like if it's 3% risk for your stop loss, you need to have at least 9% gain. Is it 4 to 1, 5 to 1, 10 to 1? There's no right answer, right? And again, this all comes down to you. It's all preference. Usually I aim for at least 10% of trade, at least. I don't like to risk more than 3%. So I'm about a 3 to 1 reward versus risk ratio kind of guy. But again, this needs to be defined. It needs to be always the same while you're building up this edge. While you're getting your cognitive and your temporal edge down, it needs to be same price and same risk versus reward. Next, as we go through this class, how do you want to enter trades? And again, it needs to be consistent. I trade off convergence. That's the next lesson. That's what I implore you to do. I think it's the best way of doing swing trading. But again, do you want to buy in gradually? Like put half down now and half in when it shows life? Do you want to wait for confirmation over the 10 EMA line? Maybe like the 20 EMA line, maybe the 5? Whatever it is. I need you to go through our next lessons or so, go through the entry process and find what works best for you, but it must be consistent. So again, think about what your entry is going to be. I'm assuming most of you guys have some experience. So again, whatever works for you works. But again, I use convergence. I find it the best, but it must be consistent. After you buy a stock, how do you hold it? Again, that's a massive question, is how do you just walk away? Well, I have a day job. I'm here right now, right? So I have a day job. It keeps me busy. I don't watch my stocks, but how are you going to function holding your stocks? These are swing trades, 3 to 10 days at least. Sometimes you get lucky on a 2-day bop, whatever it is. But again, how are you going to function holding these stocks? Do you want to zoom in and watch them and be a little more hands-on? Do you want to leave them alone and not touch them, take them off a watch list completely? It's up to you. But as we go through the class, I'll show you some tips. But again, when you buy a stock, there must be a ritual that you follow while you hold it. It must be consistent again. And again, you're probably getting really sick of me saying the word must be consistent. But again, that is the absolute key to this. You must be 100% methodical and consistent. When you get close to your price target or resistance, how do you validate out, right? Are you going to be happy taking your price target and missing a huge move if it happens? Are you willing to put more money on the table and wait for it and like lose some to see if it gets a breakout? Are you going to take half profit halfway up, then take another 25%? Again, what works best for you? No one has ever gone broke securing profits. I'm going to say it again. Absolutely nobody has gone broke securing profits. So if you miss a bunch of the move, guess what? You're still green. How many times have you, before we bought this class, how many times have you been going red, and losing a bunch of money? Guess what? If we can get you just to get green, that's 95% of it. From there, it's just perfecting your strategy and your edge. How do you want to validate out? There's many different ways. We'll cover those. Reflect on what's worked for you, what hasn't worked for you, and we'll get into that. And lastly, what are the rules going to be, right? This is the whole entire thing. What rules are you going to follow? Do I always chart correctly the first time? Yes. Do I ever lie to myself? No. So again, this is just a set of rules you're going to be setting yourself, right? These are all methodical things. Is this the right price that I'm going for? Yes. Is this the right price target? Yes. The right risk versus reward? Yes. Right pattern? Yes. Good sector? Yep. All those things that we're checking through, you must have a checklist. What's good for you is that I have produced one for you. That's going to be in a lesson or two later. I may link it down here for you on this lesson. But again, I have a whole entire thing you're going to go through every single time to make sure that's right. These are rules you must think about now and reflect on. I don't want you to get to the lesson and be like, oh, I wish I would have known that. These are things I'm laying out for you, right? And lastly, a good rule of thumb, have you ever written a thesis statement, which most of you guys probably have? And what I want you to do when you get done thinking about this by the end of the class, if I were to ask you, what's your edge? I want to have a thesis statement, like sentence or two describing it. Here's mine. I buy mid-cap stocks in bullish patterns and setups. I aim for at least 3 versus 1 risk reward, all based on the entry of convergence. I hold until at least 75% of my goal, and then I institute a trailing stop loss based off of ATR trailing stop loss. Simple as that. I'll say it one more time for you. I buy mid-cap stocks in bullish patterns and setups with at least 3 versus 1 risk versus reward, all based off of the entry of convergence. I hold until I'm at least 75% to my goal, where I institute a trailing stop loss based off ATR trailing stop loss. Simple as that. That's my edge. If you ever watch my YouTube videos or anything I do not stray away from that, right? I do not buy hype stocks. I do not buy anything that's descending or really, crashing off. I must have a solid foundation. It must be charted correctly, and then I go into it. That is why I bat around 85% success rate. Are they all bangers? No, I hit my dingers, right? I definitely hit some home runs. But again, that's my edge. So as we go through the rest of technical analysis, into the scanning area, into our indicators, please, before every lesson, reflect. So again, do you need to answer this now? Nope. But again, by the end of technical analysis and hopefully by the end of scanning and our indicators, you should have an idea of what you want to do, what you're going to specify on. And of course, again, as you get past one setup that you like, introduce a second one, introduce a third one. No one has ever been successful in a sport, in entrepreneurship, if they do not specify or specialize in something. I need you to create your edge. With no further ado, after that nice little pep talk and that nice little reflection, pause this, or between the next video, which is convergence, my favorite one, take a second and think about it. I want you guys to really reflect on this. It's so important to me that you understand your edge needs to be specific to you and work in your favor. With no further ado, let's get to the next lesson.